want to talk to you a little bit about inventing markets today. When I got involved in this business in 1970, we traded 13.7 million contracts. By 2010, this had grown to 21.3 billion. That's a compound annual growth rate of over 18%. I believe the only thing that's grown that quickly has been computer capacity. And the question is why? And for those of you who are looking at this industry, in 1970, virtually 90% of the products that you now trade didn't exist. There were no stock options. There was no energy trading. There were no financial futures, no interest rates, no stock indices. And almost all of this growth is attributed to new products. Now, that's been a heck of a ride. And when you compare it to then, they were small membership cooperative markets, and they're now publicly traded companies. The CME, a market cap of about 25 billion, the CBOE about 5 billion, and ICE about 10 billion. That's about 40 billion, roughly. So how do new markets come about? The first thing you have is a major structural change, which creates a need for capital. Then you have standardization. That's followed by creating evidences of ownership, legally rights to own something, followed by trading of those rights informally, exchanges, futures and options, and then OTC complex products. So let me give you 4 quick examples. The invention of financial innovations of the Limited Liability Corporation came about with the formation of the Dutch East India Company in 1605. It was to finance trading with the Far East. The Board of Trade was born because there was a need to export wheat in 1853 to the Crimea. So you had to basically, instead of looking at every piece of grain, seeing if it was yellow, seeing how much protein it had, what the infestation was, what the water content, you had to have a homogeneous set of standards so you could export the product, both from the Midwest to the Far East. If you fast forward to the birth of financial futures, from 45 to 70, you had the Bretton Woods Agreement, which essentially fixed currencies and interest rates. And there was no volatility involved. And so ultimately, the price of money, interest rates, became volatile in 73. And thus, we laid the groundwork for interest rate and stock index futures. And in the last case, we trade the rights to pollute, acid rain, and it was born out of the big smog in cities like Pittsburgh, New York, the result of industrial expansion in the eastern part of the United States. Now, you have to spot some of these mega trends like Bretton Woods collapsing, like an Arab oil embargo, like pollution, which is unmanageable. And once you do that, this process unfolds and you can take an opportunity. So I was involved in 2 of those 4 examples. They weren't the Dutch East India Company, by the way. Nor was it the birth of wheat trading in Chicago in 1848. It was in interest rate futures and emissions trading. So you say to yourself, you see a big structural thing like that, what do you do to capitalize on it? You need 4 things, okay? First of all, you have to start with the premise that the gains from trading exceeding the costs. These are businesses. And so you have to have the gains from trade exceeding the costs. So what are the 4 elements that go into that? Number 1 is legislative. You have to have legislation which clearly defines the commodity or what you're going to trade. You then need regulation. That's another cost. You then have to build the institution, the exchange, and collateral institutions like lawyers, accountants, professors, back office, all has to be built up. And then you have to design the contract, which is, again, an art in of itself. So let's take a couple of things that I was involved about, and I call them good derivatives, and they're good because they are regulated, exchange traded, transparent, perform a risk transfer function, and facilitate price discovery in both the futures and the spot markets. That all sounds very lofty. Well, what does it mean? You have to, if you're going to take advantage of it, either as an inventor of a product, or as a broker of the product, or as a researcher of the product, you got to figure these elements have to be there, and I'm going to devote any of you the next 30 years of my life because I believe I'm early enough in the business to capture that.